Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Michael Marrale, CEO of M Science, Marc Noët, CEO of DataProvider.com, Kirk McKeown, CEO of Carbon Arc, and Jason Rozovsky, head of legal at Interop Labs. We're here to discuss the evolution of the AI ecosystem in finance and the data-driven insight that it provides. It is great to have all of you with us. Welcome back to Trade Talks. Welcome to Trade Talks. Michael, let's kick it off with you and discuss the evolution of the AI ecosystem in finance, because at the end of the day, AI is something that financial services has been leveraging for quite some time.
Absolutely, and thanks for having us.
Of course.
You know, we're obviously still in the early days, but the pace of innovation is just exponential. You know, we've already seen just in the past 4 months, Google came out with, you know, a 1 million token context window. And then just last week, Magic came out with 100 million token context windows. So when you think about the magnitude of the increases in capacity and the ability to compute, and obviously this is driven by a lot of CapEx, we're really seeing just a chart up and to the right in terms of adoption and what is possible. And so within finance, you know, we're starting to see multi-bulge LLMs emerge, where big firms are taking historical written research, millions of reports. And I think the big question that remains is, what do you marry that with? And ultimately, you need to marry it with clean data. So I think right now, you know, 23, as I've said, was kind of a play with the new toys year. 24 is like, let's build some tools, and 25 is really, let's get a return. Let's implement those tools, let's roll them out and see if we can generate some revenue on them and help our clients generate their revenue. But it's evolving really quickly. I think where we sit today is a lot of confusion and a lot of opportunity. And I think you really have to kind of cut through the noise and figure out, how am I going to leverage something that actually generates revenue?
Right, and Mark, that really is a question when you think about where we are in this cycle, and then also being able to separate the fact that, you know, AI, is it the cure for everything, or is it just another tool that you're employing when you're, you know, thinking about improving those KPIs and revenue metrics?
The thing, like Michael said, like 2024 is basically everybody has a strategy. 25 will be part of the execution. So, and if you look at all these companies, so AI is not the cure for everything. AI is part of curing something. Getting the problem done, you use AI, but you also use clean data and different assets to actually get the problem solved. And what you see in the strategy thing right now is that everybody has, on the front end, they build up this AI strategy, but now they need to execute on it. And that will become very interesting in 25 if it's going to happen, what they say. Do they have the right people? Do they have the right computing power? Do they have the right data in place? So that's something we're looking at.
And Kirk, that really is the key to it, though. Execution, that's what it's all about, right? I mean, you need to have a problem to solve, not simply, okay, we have AI, it's associated with our brand, our product, here's a problem, here's how we're executing.
No, I completely agree, and as Mark and Mike said, a lot of this is organizational. Really defining the problem statements that are the low-hanging fruit inside of an organization, but then deploying it against the right organizational structure and culture. You know, sort of as data proliferated on Wall Street, going back to sort of the 2010 to 2014 timeframe, data was a shiny new toy, and having alternative data to make decisions was a competitive advantage, but it quickly became about your organizational alpha and how you were going to deploy it inside your organization. I see something similar here.
Yeah, and Jason, when you think about it from the privacy perspective, because you are bringing in new technologies like blockchain as an example, I mean, there's a number of emerging tech that we're talking about at the table here right now. Transaction privacy and data privacy, but in being able to leverage this in a way that's meaningful, and of course financial services, a heavily regulated space. How are you marrying all this together?
Yeah, so you know, at Interop Labs, you know, we built this network called the XR network, which is built for interoperability. And I think, you know, realistically, what financial institutions care about, at least from the blockchain perspective and probably from every perspective, is data privacy, right? And it's probably two main reasons. The first is competitive, right? They don't want everyone to know their balances on their own accounts, right? And so, you know, how do you solve for that with the idea that the purpose of blockchain is for it to be a kind of a public ledger that everybody could take a look at, right? The second is obviously regulatory, right? There's, you know, tons of regulations, you know, on how banks and other financial institutions need to keep their client data private, right? And so that's why historically banks have been, and at least many financial institutions have been looking at private blockchain instances, right? Situations that are kind of walled gardens intranet-like environments. And so what we've been doing at XLR is trying to, show the world that there's another way to do it, right? And frankly, interoperability is the way where you can have a private network, right? You can connect it to other networks, other private networks, other public networks, right? And then have that ability to move assets across. And one example I'll give is, we're part of the Monetary Authority of Singapore's Project Guardian. Right. And so we've done work with JP Morgan as an example. We're doing work with Deutsche Bank today. And they're all looking to see how do you actually move assets and use an interoperability layer like XLR to move assets from one private instance of a network to either a public or a private network.
Yeah, I mean, that really is the key, is interoperability, regardless of what technology you're talking about, because, Michael, you also have the integration of these emerging technologies with legacy institutions and infrastructure.
Yeah, and to Kirk's point earlier, and as a jumping off point for your question, the cultural mindset of the organization is really important. And I'm seeing that within our business. We did a town hall meeting today where we talked about, I believe there will be an opportunity at least to bring to market an AI CEO, right? So, being ingrained, being fluent in what is happening, I think is really important. We need to get our peoples to start thinking algorithmically and really understanding, okay, maybe the platform will write the code, but if you're thinking in coding terms, you can come to the right outcome or result. And so along those lines, bringing everything together is a challenge from a leadership perspective. Ensuring that people are thinking about what's going to be in 3 to 5 years, but still executing on what we need done today is really important. But that interoperability extends, transcends beyond just AI, leveraging technology, and the integration of clean data. It's a cultural phenomenon as well that I think requires a lot of work from the top.
And how do you account for the fact that you have all these institutions that have these legacy IT infrastructure systems, right, built over the course of decades and decades. None of them really meant to necessarily talk to each other initially, right? So now you want to bring in kind of new technologies to talk to these legacy IT stacks.
Yeah.
Do you find that there's kind of a some hurdle that you have to kind of cross there in order to get them thinking that way?
That hurdle exists at the enterprise level, and if you think about M-Science, like our raw material is data. So for years we've been evangelizing to large enterprise partners. You need to structure your data, clean it up, and ultimately put yourself in a really strong position to monetize. Now, most companies were slow moving in that endeavor. But the onset, the proliferation of AI and the desire to leverage AI driven technologies is actually getting everyone in gear at the enterprise to ensure that their data is clean, which actually works in our favor, right? Because ultimately the more data, the data availability as it proliferates opens up a lot of new opportunities for M-Science. So this is a nice catalyst in that regard. But I think they've hit a wall in many cases. They have opportunities to leverage AI, but their data is a mess. And within these large enterprise partners, customers, they've got multiple platforms trying to speak to each other. And I think that's a big thing that's happening, that's underway right now to clean all of that up and harmonize all of their data.
Well, and then of course, Mark, the challenges too when you think about CapEx and allocating resources for the tech stack. I mean, how do you prioritize that? Because then of course you have, cybersecurity is one of those things as you're integrating different vendors and moving your tech stack around. So, how do you prioritize CapEx spend?
Yeah, when we started, we index the web and we structure all the data from the web and put it into one big platform. So we started with AI around 2015. That's where we actually came to see like, okay, if we're building up a stack in the cloud, that's going to be very expensive. So we need to figure out how to do this. We also needed to have the right persons in place that actually understand how this works. So CapEx is one, but CapEx actually involves the machines. You need to have the machines, could be either in the cloud or you should have your own data center. Or you should also look at the people that are running the AI stack for you because they need to understand what you're doing with it. So that's why I said like 2004, 2003 was basically figuring out, okay, how do all these LLMs work? What can you do with it? How do you route them? You still need to have people that actually understand how it works. What's the output? What can we do with it? How can we leverage it? And then we can scale it. But the CapEx right now is probably at big tech. They
Yeah.
do a lot of the CapEx. They build all the systems. They can because they have the balance sheet to do it.
Right. So, I mean, it makes it challenging, Kirk, if you're a smaller company and you're trying to, okay, we all had to migrate to the cloud if you wanted to be competitive. You have to have some sort of, outward-looking AI product to, fit in within that narrative. So, is the skill set available, or what needs to happen? I mean, even internally here, we're learning about all these new AI tools that's available for us internally, and it's. I never thought I'd be learning about these tools if you would have asked me 2 years ago.
No, I mean, there's an education and an evangelism problem around where the ecosystem is moving, because it's moving really fast. If you think about it, there are sort of three parts to the ecosystem. There's the models, there's the chips, and then there's the data structure. And the data structure problem is the, is the bottleneck that will get solved and needs to get solved. And frankly, it's the challenge that we're seeing in the market. Access to clean, structured data beyond what's inside your four walls is expensive, hard to work with, requires a ton of talent. From a chip perspective, everybody talks about the chip shortage. Corning laid more glass in 1999. It took 8 years to light it all up. So we're seeing this bolus of the hype cycle of AI, which is the big players are spending the money, building the models, competing on a daily basis on the leaderboard, on Hugging Face and everything else. But really the long tail here is getting data structure to a place where it's affordable, it's set up to be consumed by the models in a way that's facile and straightforward, and also privacy first and compliant. Sort of the big players are all getting sued every day. Anthropic got sued over the weekend or last week. OpenAI has a number of litigations open against it. People haven't figured out the data structure problem. Until that happens, both from a legal perspective as well as from a data structure perspective, we're going to continue to see these fits and starts, and people are going to wonder when it's going to turn into a hard ROI.
Right. It feels like, Jason, it's almost like Moore's Law. More technology begets more technology. And from a legal perspective, do you think some of these products have been brought to market either too quick without thinking about the risk management perspective? I mean, you're head of legal. You're always thinking about risk, right? So.
Yeah, I mean, it does seem as though, kind of the bull's out of the barn or whatnot, right? It's in the sense of, you have all these technologies that have come out, and people are now thinking about the legal repercussions after the fact, right? And you have kind of the lawsuits with the, the IP considerations as an example, right? And I think that, at least from my perspective, all these novel questions, whether it's AI or blockchain or whatnot, right? There's a history of technology kind of leading regulators to kind of rethink what they're doing, right? So at least from the blockchain side as well, right? We're thinking about what are the ways that you can actually create benefits for regulators from some of this technology, right? You have verifiability and authentication and things like that on the blockchain side, right? I think on the AI side, right, there might be that same potential opportunity, right? Is there some opportunity for regulators to use the technology either themselves or to have insights into it? But I think the technology was built and kind of surprised everybody. And now people are just trying to catch up the way they did with the internet, frankly, right?
Well, I mean, it's part of the consumer vernacular as well, right? And that's really what catapulted it, because, Michael, my initial, question to you was AI is nothing new within your world. It's just the generative AI that the average person, such as myself, is familiar with. But I want to take a step back for a moment here when we're talking about the right structured data. How do you quantify that? What does that mean, in layperson's terms of when, okay, this is it, this is the right data set?
Yeah, I mean, first and foremost, we're very grateful to big tech for the CapEx and the innovations that they've brought forward. As a matter of fact, if you think back to late 22, before GPT-3, I think it was, we were pretty much heading into a recession, right? Tech layoffs were happening at scale. And then AI saved us, I believe. So our framework is, let's leverage big tech to the fullest extent that we possibly can, recognizing it's an ever-changing environment from a technology perspective. And let's only focus on building the things that are specific to us, like ensuring that we have that very clean, we call it analyst-curated data. So we have over 400 analyst-curated clean data feeds that are pluggable into our clients' workflow processes. And to the extent that we're helping them generate alpha, it's a very sticky proposition. So kind of a happy accident in that we were always doing this, and then this whole thing happened. So we find ourselves in a very unique position. But as far as, to answer your question specifically, we need to make sure that we spend an inordinate amount of time on the things that we can control beyond what the big companies that are spending $50, $80 billion a year on CapEx are doing. And I think at the end of the day, we're all beneficiaries of that.
Yeah, well, I mean, Mark, I think that's a happy marriage at the end of the day. You know, smaller companies have the ability to be nimble and pivot more quickly with the technology. Then, of course, you know, think like a startup at scale, like an established tech company. To me, it sounds like, you know, the perfect marriage if you're able to integrate in that way.
Yeah, absolutely, absolutely. So big tech will build you basically the infrastructure, and then every startup could basically execute on that. So if you go back to 2000, you had to build your own platforms, you had to build your own stack, you had to build everything yourselves. Now you have the big techs, now you can run on the big techs, or you can actually build your own stack or run it internally. But eventually it ends up at AI, it still is a black box. So you still need to figure out, even if you're a startup, you see a lot of startups now using AI, and still you have to figure out, how does this AI work? What can it do?
Right.
What are the rights? What is the legal right in that AI black box? Can I use it? Can I build my startup out of it? Because otherwise you're building a company, basically getting into all this legal trouble.
Yeah.
So that will be challenging for startups right now.
Yeah, it certainly will be, but again, it goes back to the point, Kirk, what problem am I trying to solve?
That's right.
Right, and if you have no, you know, runway in terms of what am I even doing here, how can you even make those kinds of decisions?
You know, what's one of the cool things, having worked on in investment management for a long time, is, you know, sort of really modularizing the research process to generate alpha, and thinking about the decisions that a company needs to make to improve their revenues or cut their costs, and then Wall Street is just trying to predict that, right? And so you can really modularize your different decision matrices and create the appropriate use cases, such that, you know, sort of whether you're a hotel or a hospital, you have a very similar business model. Those use cases are relatable, and so when you're trying to figure out how to improve your hospital utilization or your hotel utilization, you're driving those use cases and solving those problems. And so I think AI is actually forcing companies and investors to really get deeper into domain knowledge, which that context layer married with really good data structure allows for better outcomes.
I mean, think about it though, if you are able to leverage AI in that way, even just think about an analyst report, you know, Apple reports, 50 analysts are writing on it, they're all adjusting models. If you can operationalize that process and standardize it to a certain extent, then you start reading in between the lines and extrapolating the ideas that might not be as available to you when you're just going through the motions of updating your model. And that's where I think it gets exciting, and that's when you start differentiating yourselves, when you're able to extrapolate and find these ideas that might not be quite as obvious because you're, you know, you're going through the physical functions of updating, you know, your spreadsheets.
That's right, and you know, it's, you know, you just reminded me of the first industrial revolution, where, you know, it was like 40 or 50% of the population was working in fields, and then, you know, sort of the combine came along, and all the different tools came along, and it moved into knowledge workers, and you're seeing the next phase, which is you're optimizing knowledge time to really around synthesis, whereas as opposed to sort of the manual labor of updating your model, which for most buy-side analysts is a frantic, you know, morning of a report, you know, sort of, it's a crazy time.
Like, who doesn't want to spend a week in the office, right?
Yeah. And
like
that's
literally
the mundane
overnight.
that nobody wants to do, and that's why people leave, because they're stuck in Excel. You know, what we've done in-house is given our research teams the ability to start on first or second base now. You know, we publish 550 reports per quarter. Each report requires 7 hours of a human collating and structuring data to get it ready, and we've zapped that 7 hours per. So you're talking about, you know, 3,700 person hours per quarter.
What's interesting though, right, is going back to the legal point, right? Like from a liability perspective, to the extent that there are companies that can't, you know, build their own tools in-house, right? They're going to be relying on some third-party vendor somewhere, right? So all of a sudden, right, the conclusion is what you're getting from these, you know, spit out AI tools, right? So as an example, you know, ChatGPT today, right? I mean, how many times can you go ahead, you know, input a question and it'll really just give you a hallucination, right? A completely false narrative, completely confident, right? And so at least from like a legal perspective, right, there is the question of if you're not building it in-house and you are outsourcing it, how much liability should these third-party AI vendors be taking on, right? And would they be able to sustain that, right? Because if to the extent that you have hallucination of the margins, but then you get an analyst report that gets a very off the mark conclusion, I think it'll be interesting to see how kind of the litigation plays out.
Last 30 seconds.
There's one more unintended consequence of the automation of some of these manual tasks, which is Wall Street has always been an apprentice business where you learn through doing and you learn through sort of the iteration of working the model and understanding the model, for example. And what happens when that gets taken away? How do people get trained to go through that junior analyst, senior analyst role, that knowledge base? Where does it come from and how do you train it and teach it?
Well, that's a good question. I'm sure a lot of first-year law associates and accountants will be asking the same thing as well. Gentlemen, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite and Jill Malandrino, Global Markets Reporter at Nasdaq.